Hello everyone. I would like to walk you through of the trades we took this week. It was an interesting week, I can say. We had a lot of good trades, to be honest. So everything, guys, starts from the weekly preparation. Okay, some traders they think that trading is a joke. They open their MetaTrader platform, their trading view, and they start looking for, okay, what's going on today? Is anything there so I can trade? But the matter of fact, trading is something beyond this stuff. And let me make it very clear. Every single week, we send out the weekly trading plan. Now, of course we don't know what's going to happen in the market, but definitely we have some valid knowledge and qualified knowledge with certificates as well in practice, so we can give good estimation of what might going to happen. Plus, if what we expect won't happen, we also have the alternative, like with the WTI or US oil against the US dollar. And as most of you know, perhaps if you are on our channels, on the Discord communities and all this stuff, you know that every single day taking trades on the US oil. That's the not the only one, but let's say if I have to choose only one, I will have go with the US oil or the WTI. So for many reasons, after 12 years of trading, that what works for me, that what I understand the most when I trade, and I prefer trading that. Okay, but this doesn't take away the part that I do analysis and I can trade any market, but on a daily basis, I send out trading setups on the US oil. That's it. So what was the plan? And it's public on the social media. You can go and find it. It's not something that I did today just to show it. It's there. It's been there since Sunday night. On the US oil, on the 4-hour chart, that's a 4-hour time frame, the price made these lower highs and lower low formation. Now, at this point here, I marked that there is a refined bullish engulfing order block that I took it from a 30-minute chart. Price was on Friday night, price was right there um, with this rejection at the top. So, and it was right at the 61.8% of Fibonacci retracement, measuring the last swing from the swing A, excuse me, to the swing B. What happened as the moving averages also turned down and they were looking bearish? The 200 moving average was very apart and much higher than the 50 and the 20. What happened? We expected from Monday onwards to see continuation of the downtrend, right? We had some bullish crossover on the stochastic and something on the MACD. I think you can see it. Just 1 second. Here, MACD below zero and also a bullish crossover on the MACD. And here is the day. It was before the 27th. So what I marked here is the weekly low. That was the last price the market accepted during that week, and that was the last price the market accepted as the highest price during the same week. Therefore, we take them as the weekly strong support and resistance, and it's very relevant. And how can you utilize? First, when you are in the trade and the price approaches a support, you must take some trade management, as I like to call it. Um, Position management, not risk management, not money management. These things, they just bring confusion to the trader. The trader makes money only when he or she is able to manage the position while the trade is running. Now, if everything you learn about risk management, it's the holy grail of trading, why doesn't work for more than, let's say, 80% of the traders? Okay, so at some point you have to start getting knowledge that it's very relevant to this type of trading we are doing here. Okay, so with maybe for some traders that risk management it works. I'm not saying to over risk on your positions, but you can't just set and forget the trade. It's like it doesn't work in the real world. Okay, so from Monday onward, we were expecting that the market will continue, but if the market will continue and come until this point here, then we will have to take some action at this area. Okay, or if the market stopped and reversed at any resistance level, we have to take this consideration. But on the other hand, if the price penetrates the resistance levels, again we have to consider that. And also we have the highest the weekly high, the highest price, the market traded last week. But and also if the price breaks under the support, then we will see the next level of support. Okay, if it gets rejected at the support, then we have to um, consider our trading plans, because the trend is down at this point. So if we bring the meta trading view up front, so here is the relevant level. That's the level we mentioned as R1, and here is the swing A as the R2. Do you guys see that? Yeah, I hope you understand. So on Monday, trading during the New York trading session, I opened my platform and one second. And the price was right up here. So here is the 1600. That's my local time, and it means it's 9 a.m. New York time. So I opened the chart and the market already closed the 4-hour candle with the 4-hour candle before above the R1 resistance. What does it mean? It means most likely the market is going to hit all the way here. Okay, so we apply our strategy, and that was the Monday. Yep. So we applied our strategy, and here it was a bullish engulfing candle, and we took the trade up to the R2 resistance. That's all. Okay, we are not the market movers to know where we're gonna take the price, or to take. I don't usually take partial close unless there is a direction, same direction on the 4-hour and the 30-minute chart. Otherwise, I don't do any stuff like partial close and all this stuff. I just trail my stop loss. I'm very active during my when I have orders running. Um, I'm always on the charts. I look, if something changes, I'm going to take action. I will close the trade with a small loss, or I'm going to manage the trade. I can't just leave the trade alone, because you don't know what can happen. And then some people, you might say, okay, Theo, why do you use the stop loss? The stop loss, I use it to trail it primarily. So I know what's the lowest point that I'm willing to get out if the position doesn't work in my favor. But on the other hand, as long as the price takes over, okay, and it moves away from the level, then the stop loss is going to start moving a little bit higher and higher. I'm not going to go and stick it right underneath the next candle's low, because most of the times on the intraday chart, the price is going to create this bullish engulfing during an uptrend. Okay, that's why I don't do it. I'm a little bit more, I drag it slowly. So next one, on Tuesday, that was one of the good trades. On Tuesday, on the 4-hour chart, Here it's Tuesday, the 28th of May, and the market at 12 o'clock again closed during the day actually, and during the London session as well as the Asian session, the market closed above the R2 resistance. So that's a sign that where the market it might go, if it's going to rally, it's going to go straight to the previous week's high. Here we had it marked on the chart. We have also the 200 period moving average. 200, it should be somewhere there. So it's gonna add too much weight on this trade, okay? And the resistance, bearish engulfing here, it worked perfectly the next day, but we will see it in a while. So at this point here, we went down to the 30-minute chart. It was that was a tricky trade. So let me walk you through. The price made this higher high, and that was a consolidation. For me, it was a no-brainer. There's also an upward trend lines here with point 1, 2, 3, and we confirm the fourth with the high here. Okay, so the price closed with this bullish strong candle, as you can see, right 30 minutes after the New York Open. And then a bearish candle appear, and then a bullish strong candle confirming that the price is trading above this intraday resistance. Next, it was the pre-confirmation. This shooting star, or this candle with a long upper wick, was the beginning of most traders thinking that, hey, the market went too far and we're going to short it. But I was ready for another breakout trade right here. So a bullish candle here again confirmed that the selling orders are not to take over this market, and I just went out. I entered here basically and got out at this point there. Okay, so that was the trade for the for Tuesday. On Wednesday, the market just right. That's the R3 high, as you can see from here. Yeah. So the market was here and it printed this bearish rejection candles, and at 3:30, 4 o'clock here, I was about to take the trade at 4:30, and the market made this higher high, but both the RSI and the MACD with bearish or negative divergences, but that was the signal for a strong retracement or a deep retracement. And a deep retracement should occur up to this level here, maximum up to this order block. But the price retraced 100% of that move. So it's a strong indication that the market is extremely weak. Now, it was during the beginning, let's say, of the equity, the starting of the equities trading in the US, and the market was about to take over. So I put a sell stop order here to trade the low with a stop loss above there, and we took all the wave to the downside. Okay, it was one of the biggest trades of the week, actually, this one. And on Thursday, I got it wrong here. I was in a hurry, or for any reason, I decided to take this doji here at support, because we had some kind of at that point we had these bullish divergences here on the RSI and on the MACD, and I thought, okay, I'll take this to the long side, and I got stopped out somewhere there, so that was okay. And then we re-enter on the bearish engulfing, because we realize that the trend continues up to this level here, and that was it. And today, it was the last trading day of the week. Again, still looking for short, because even on this time frame, you see the market makes lower highs and lower lows. Actually, we were right here. And if you have measured this swing, it was the 61.8. No, okay, right below the 61.8. Get rejected at the previous swing low. So on the 4-hour chart, the reason why it's not showing here. It was just a moment up. It was here. Sorry, I was looking from another broker's the data, but again, everything was the same before. It was just this bearish candle here that I liked it, and I entered short right at the close, and a stop loss of 60 pips, and a take profit right at the beginning of the bullish engulfing order block you see on the left. And that one, it was right at the previous week's low. You see, guys, that was on previous Friday. And if you look at here, we had refined. It's just different different brokers. The one is, which one is this? FX doesn't say anything, and this is from the TVC, whatever. Anyway, for a reason, I have two different US oil charts that I watched. They just show the same information, but I want to see if one chart, let's say, shows. Here is the thing: the one starts 1 hour earlier to it changed the candles, and the other starts 1 hour later. That's why now I notice that. Anyway, for any reason, we don't care. That was the previous week's low, doesn't change anything. And at this point here, we know that the market is it forms a bullish engulfing order block. Okay, so and on this one here that I used for the trading, it shows clearly the bullish engulfing order block. So that was all for today. Sorry, Great British Pound as well. That was another great trade. Let me bring that. Great British Pound against the US dollar. We spot the negative divergences. As you guys here, the same chart. And at this point here, for our bullish engulfing order block, it was this one here. It pushed the price higher, then the price retraced. That happened, you see, on Friday, Monday, Tuesday, Wednesday, Thursday. Yesterday, at this same area, the price created another bullish engulfing order block, and we took the trade long with 20 pip stop loss, and we target this R1. That was the previous week's high. Okay, so if you are looking for consistency in trading, you have to start looking towards the right guidance. And we are here at Market Minds Mastery. We are experienced. I'm certified financial technical analyst. I hold a couple of certifications as a market analyst, and the diplomas are with distinction awards. It's not a joke. Okay, the reason is because I'm passionate about the markets, about trading, and I'm very, very patient to wait for the setup to appear before I execute. Okay, after 12 years of experience and of trading, I'm in a position to keep you accountable. I'm in a position to coach you, mentor you, and I challenge you, if you want to if you want to try and understand how can I positively impact your trading, I can connect you with people that they already have a good satisfaction, I can say, and you can speak with them, and then you decide if you want to come to me or if you want to receive the weekly, daily analysis and the daily setups that I send out to our groups. You just let me know. You send us an email at contact@marketmindmastery.com or any of the social media. And I would like to wish to everyone to have a fantastic evening. Enjoy your weekend. And we're going to be back for those that are on our social media, on our channels, Discord and Telegram, from Monday with more setups and more trading, and all the trading plans for the week for 12 pairs, including commodities, indices, and cryptocurrencies. Thank you, everyone. Bye bye.